So, results. Just talk us through the key features as you see them.
So for me, the highlights of the results were revenue up 3% to 410 million euros, clean EBITDA up by 13% to 92.3 million euros, and clean EPS from continuing operations up by 23% on a pro forma basis. On top of that, of course, we raised the dividend by 10% to 1.72 pence per share. And if you actually look at the last 12 months, that means that we've returned around 100 million euros to shareholders in the past 12 months, which we're very happy with. Casino was the main driver behind the growth. We saw a 14% increase in revenue and a 19% increase in clean EBITDA. So once again, very strong growth from that vertical. Poker remains a challenge, but we do have some key milestones coming up, which are going to help us address some of the issues there when the platforms come together. Not only will that increase the liquidity, of course, but it will allow us to divert some resources which have been focused on the integration program to innovation products.
Now, Spain, the backdated tax, you would have made a profit without that. Just talk us through, was this a one-off, or do you think there are going to be other similar charges in other regulating countries?
We think it was a one-off situation. We're very surprised, along with a number of other operators, that the Spanish authorities decided to pursue this course of action. And it's actually something that we're reviewing with our lawyers, because we don't believe that there's any basis for the application of retroactive taxes within the EU.
Customer acquisition and retention costs are down to 20.2% of total revenue. Putting aside any possible launch into the USA, do you expect them to remain at this level going forwards? Because marketing costs have come down, haven't they?
So customer acquisition and retention costs were 20.2% of revenue in the first half, and that was lower than we had initially expected. And we guided the market on this point at our pre-close update, and that was primarily because the opening of Spain was delayed from when we first thought. Marketing costs as a percentage of revenue would also be expected to come down in the second half, partly due to the fact that we had Denmark regulating in the first half, and also now that we have this new federal tax introduced in Germany. So I think, where are they going to be going forward? You should expect marketing costs as a percentage of revenue, if you take customer acquisition and retention together with affiliates, to be around the same level for the full year as we saw in 2011. But the mix will be slightly different. It'll be slightly in favour of more direct costs with a lower amount on affiliates.
Now, mobile now represents approximately 5% of revenues. Just give us a sort of snapshot of the next 3 years, and to what extent is this going to be driven by sports betting?
So sports betting was certainly the main driver behind the increase in mobile revenues, which were up by 116% year on year. Sports betting on mobile accounts around 80% of mobile GGR at the moment, but the other verticals, poker and casino, have also seen very strong year-on-year growth. Where will it go in the next 3 years is very difficult to predict, but I would say that it should be at least 30% of our overall gaming revenue in regulated countries.
Are you concerned that casino and games is the only business vertical delivering good growth at the moment, and to what extent is this partly driven by pressure from continued weakness in poker?
Well, the first point I'd like to make is that all verticals except for poker showed growth in EBITDA year on year. But that having been said, casino is clearly where the strongest top line growth is coming from. And there is an impact from lower poker revenue and players on casino through lower cross-sell activity. And that's why we are taking steps to address the issues that we have in poker. We have a 4-step plan in place, starting off with bringing the platforms together, which is going to improve the liquidity levels, but we're also looking to optimize the liquidity on the network. We're looking to innovate the product again, because a lot of our technology resources right now have been tied up on delivering the synergies that we committed to at the time of the merger, and also enabling our launch in newly regulating markets. So as those resources roll off of the integration program, they can be redeployed into effectively innovation. And we're also looking to reposition the Party Poker brand. All of those activities we hope to see return poker to growth. But casino has demonstrated its ability over the years to show that it can grow despite poker having some headwinds.
Now, the sports result was impacted by a 69% increase in bonuses. Can you just talk us through that?
Yes, bonus rates increased in the second quarter because of the Euro 2012 Championship. We ran a number of reload campaigns in the period to try and encourage customers to reload their wallets ahead of the Euro Championship. And also we had a significant marketing campaign to try and attract new customers. And we were very successful in that. You would have seen in the release that the number of new player sign-ups were up by 475,000. And of course, with these new sign-ups, there is typically a bonus offer attached. So that's really the main driver of the increase in bonus rates, which went up to about 17.2% of gross revenue. If you look going forward, we would expect, now that the Euro 2012 Championship is out of the way, and also the new federal tax in Germany has been introduced, we will see bonus rates in sports move to more normalised levels of around 11% of GGR.
So bingo gross profit flat on reduced gross revenues, but clean EBITDA was driven up by higher player yields. Given the launch into Spain, should we be expected to see higher bonuses and marketing costs going forward and a fall in a sort of lower EBITDA?
Well, in terms of bonus rates, first of all, there will be a little bit of an increase in bonus rates arising from the launch into Spain. But because Spain and the overall size of the bingo market there relative to the UK and to Italy is relatively small, the increase in bonus rates will also be modest of, I don't know, maybe around a percentage point. In terms of customer acquisition and retention spend, yes, that will increase in Spain, but I would refer back to the previous answer as to where marketing costs are going to go for the full year. And, you know, as a percentage of revenue, I'd expect them to be in line with last year, and actually you would see a drop from H1 to H2 for the reasons I outlined earlier.
Now, are you happy with the planned synergies from the merger going forward, and are they on target for this year and next year?
Yes, we delivered over 23 million of synergies last year. This year we said that figure would rise to 40 million, so there's an incremental delivery of 16.7 million. In the first half we delivered 7.3 million euros, so just under half of that target for the year. So we're comfortable. We think that we're on track to hit the 40 million for this current year, and for the following year the 65 million target of annualised synergies in 2013.
So you bought back 70 million euro of shares and you've increased the dividend. What are your plans for cash going forwards, and might you be continuing to buy back shares?
Yes, last year we announced a distribution policy which effectively had two components. A share buyback programme of up to 75 million euros, which was essentially designed to return the surplus cash that the company had to its shareholders, and we bought back over 70 million euros worth of shares in the past 12 months. In addition to that, we had a progressive dividend policy of at least 30% of normalised free cash flow. And as you will have seen today, we have announced a 10% increase in the interim dividend, which is consistent with that and also reflects the highly cash generative nature of the business. In respect of share buybacks going forward, then we will consider them, but of course it will be subject to other investment opportunities that exist at the time, the prevailing market conditions and the overall financial position of the company.
Now, current trading is soft. Can you just give us your thoughts about that?
So gross gaming revenue on an average daily basis was down on the second quarter. But of course there are a number of reasons for that, and we would typically expect Q3 to be down on Q2 in any event, simply because of seasonality. This year, of course, we've also had the fact that Euro 2012 was running in the second quarter, which boosted activity levels there. And we've also had the Olympics in the third quarter, which, as well as having a detrimental effect on some of the verticals such as poker and casino, has actually meant that some of our key leagues have actually started late, like the Bundesliga, for example, which is one of the most bet on events for our customers in Germany. We remain confident about the full year outlook.